Good morning, friends. Brooke here from LegaSHE. Like, comment, subscribe. Now that that is out of the way, today we are going to talk terminology. Oof, in commercial real estate, you're going to hear a lot of people throw around words, and the words can often be intimidating, but they're really not. In honor of our theme of simplifying literally everything, I am going to walk through what people are talking about when they're talking about the core plus, value add, or opportunistic real estate. Four things. No, it's actually really, really simple. Really simple. It's just thinking about where that property is in its stage of development. That's it, basically. But I'm also going to throw in a little bit of spice for you, which is the equity folks tend to use those four terms as they're talking about commercial real estate. The debt folks tend to use different terminology. So if you're sitting in a bank, for example, you're going to say stabilized value add and construction or development. So terms, lots of terms today. Don't worry, this stuff is simple. I'm going to break it down for you. Come along on the journey. Sometimes the journey requires glasses. So let's go. Core plus stabilized. We'll start there. Before we dig in, I want you to think of call it spectrum. And I want you to think of cash flowing, pinnacle of the amount of cash flow a building is going to receive on one end. And I want you to think about not yet cash flowing. Ooh, could be a pile of dirt. There's nothing there to cash flow with on the other end. So I'm cash flowing. I am, achieving the best cash flow I can. One end, no cash flow at all. There's a lot of work that needs to be done to that property to get there. That's your spectrum. So core plus, or stabilized. Live on the cash flowing end of the spectrum. These are considered the lowest risk assets. These are assets that don't require major capital overhauling, major capital investment to perform. These are assets that have tenants in place. These are assets that are generating net operating income. Remember, revenue less expense, net operating income. So these are your core assets. It's sort of as it sounds. They're core. They do what they do. They're living there. There's a building right there, and it's got all of its tenants in place, and it's making cash flow. Great. Cool. Nothing much to be done besides maintain it. Now, what's the difference between core and core plus, you say? Because I hear these two things thrown around. Core plus, typically, now again, simplifying, is in honor of the location of the asset. Core assets are in, really well-known, we know what we're getting in the location, assets that have tenants in place. Sometimes you have equity strategies called core plus strategies, and those strategies are related to, this is not yet a proven location, so maybe there's a little bit of change that's going to happen over time to this location, which is going to change the cash flow of the asset as they sign new tenants to the property. It's that asset is hopefully going to get a plus. It's going to get a little bit more net operating income over time. So stabilized, core plus, live over on the I've got tenants space, don't need a lot of investment in me. And now we get into value add. So value add is can often be a very subjective thing. I love sitting back and watching CRE finance, commercial real estate finance folks debate their definitions, all of which come from their own specific experience and their own specific pocket of commercial real estate finance. And as you zoom up and you look over many different companies and you talk to lots of different people with curiosity, open-mindedness as an intern of life, as we've discussed before, you realize that a lot of this terminology is very subjective. But value add, if I look at my spectrum again, and I say, here's where my core plus and my stabilized are, and way over here is pure play development. nothing really there on that site yet. Value add's going to be somewhere in between. So it can be relatively close to core and core plus, or it can be actually swing relatively close to the end that's, you know, pure play development, but not quite, because that, I'm going to define that last. So value add is, and it can come in lots of different forms. So I'm going to boil it down again to most simple form. I have a property, and this property is lacking in some cash flow. It has more potential. It could be a property that's totally empty and needs to be re-tenanted, needs some investment in it, and then it's going to be re-tenanted. That's a value add opportunity. It could be a property that's missing 2 tenants, and all you're doing is lightly renovating those 2 bays or units in order to get it to a place where tenants in today's market want that space. Maybe the space is a little tired, it needs a little love. So value add on your spectrum is somewhere in between core, core plus stabilized, and fully I need to be developed opportunistic, right? So it's going to be in between. And those assets are going to come lots of different asset classes. They're going to have different stages of their development, but in all cases, they typically have a building there. There's something there that you can work with, okay? On to the next. Last, but most certainly not least by any stretch of the imagination, is coming way over here to this end of the spectrum, opportunistic construction development. This is a property that may not be there yet. Maybe a property that's half built, that hasn't been completed yet, right? This is we're taking a bet on putting something there that's never been there before, and then we're going to lease it up. And so this opportunistic / construction or development space tends to be a longer term space, and that's the highest risk space. I might be investing for 36 plus months over here before that building is up off the ground and ready to be tenanted in some cases. So this is the most risky, most complicated, I have to have nerves and gut of steel to be comfortable investing in this space, operating in this space, giving capital in this space. That is your basics, very, very boiled down basics of what folks are talking about in commercial real estate when they're asking you what your strategy is, or what strategy does this asset fit into. You can always join me here or join me on LegaSHE.com. Thanks, everyone. Have a wonderful day.